Hey guys, what's going on? I am trying to see if I can get this to show on YouTube, you guys. So bear with me as I am. Hey guys, what's going on? I'm trying to figure it out, but it looks like it's working. All right, hopefully it's working. And we'll go from there. Okay, cool. So today's topic, we are going to discuss the Fibonacci, and hopefully you don't hear the background noise. I do have a music studio in my house, so you may be able to hear it. But what we're going to do is if you are a beginner and you have a really hard time identifying your lows and your highs, what you can do is use a indicator called fractals. It's really awesome for traders. It helps them identify when structure is being broken. It also is kind of like training wheels for highs and lows. So personally, it's something that I like to look at. I like to use for my new traders so that they can have an idea of what it looks like. Give me 1 second while I just quickly hop on. There we go to see. All right, very cool. I just want to see if I can look at your comments. If there are any comments, I don't really do this. Oh, hey, Riley. I'm so happy you're on here because I always get scared doing this. But we're going to talk about Fibonacci. We're going to talk about Fibonacci basics. And what I'm going to do is I'm going to go over how I draw them. And we're going to go over just a basic, well, not basic, but we're going to go over how they work and how you can practice these with whatever pair or ticker you trade, whatever it is that you trade, because certain pairs like to pull back to certain levels. You may hear that some people call the golden ratio or kill zones, or there's a whole bunch of names for them. I'm not going to get into that. I'm just going to just educate you and then you guys can call it whatever you want. Okay. So if you're using TradingView, what you're going to use is your Fibonacci retracement, which is the first option right here on the top left. So you're going to go three, icons down, and you're going to hit that Fibonacci retracement. Now, before we use this, what you want to do is you want to understand how this works. When we have a trending market, obviously, and a buy trend, we have highs and lows. When we have a bearish trend, we're creating lower lows and lower highs. So in a bullish market, we have our higher highs and higher lows. On our bearish market, our lower lows and our lower highs. Fibonacci helps you determine if there's going to be a trend continuation. You guys, hey guys. Oh, let me move this over here since y'all chatting. But it helps you determine if there's a trend continuation. It also helps you kind of determine if there's going to be a bigger impulse in the market if you understand these numbers. Now, you cannot use Fibonacci in a consolidating market. It is essentially a trend-based tool. You can try to use it on a smaller time frame, like your 1 minute or your 3 minute or consolidation, because it will be some type of structure or like a mini trend within the higher time frame consolidation. But this is what we're going to talk about here, trend. Okay. Now, when you're drawing your Fibonacci for a buy, and I'm going to write here buy so that you guys have this here, so you can screenshot it if you need to. This is going to be our buy, and this right here is going to be our sell. Okay. When you're drawing your Fibonacci for a buy, think about it like drawing a trend line. When you're drawing a trend line for a buy, you draw it from low to high, right? So if we were drawing a trend line, we draw from the bottom to the top because essentially we want our trend line to act like a support, but just in a diagonal. Same thing with the bearish trend. So when we're drawing Fibonacci, right, we're going to draw it just like a trend line from top to bottom, just so that it can touch it underneath it and then shoot down. So you have to be able to identify swing lows and swing highs, which are basically the big move at the bottom for the buy and right before market starts to reverse. So that's going to be your swing high. There will be many little pullbacks in between the big swing move. And yes, you can use your Fibonacci on those as well as you become more advanced. But we're going to just talk about the basic swing low to swing high, swing low to swing high. We all know that the market does not move this beautifully every day or every week. We know this. How it will look inside is sometimes like this, right? You'll see this and then it'll come back up, then it'll do this. Same thing here. It'll kind of come back up here, then do this. So you have all these little waves within the bigger waves, okay? What you want to focus on at the moment as a newbie are the bigger waves. To draw your Fibonacci on a buy trend, you're going to take your swing low to your swing high, okay? And I'm going to go over these numbers. For your bearish trend, you're going to draw it from your swing high to your swing low. Now, the goal of this is to measure your retracement. And you will start to see that whatever it is you're trading is going to pull back to a particular percentage a lot. If the market ever pulls back to one, that means there is no trend and there's a possibility of a reversal occurring. Or it could just be making a double bottom or a double top, and then it can go ahead and move after that. What you are looking for is for any one of these percentages to be respected. Now, I don't have all of them up there. I'm missing my 88.6, which a lot of people may or may not use. I don't use that. Some people use that as like their guide for a stop loss. That's just not something that I do. It doesn't work with my strategy. What I do have here in blue is the 50%, the 61.8, and the 71%. With what I trade, my pairs love to come back to those numbers. I have back tested this on numerous occasions, and I have a strategy that I use with this that's a little bit more advanced that pretty much gets me a wick entry every single time, and it allows me to use limit orders. So anytime you're using Fibonacci, you are going to be utilizing limit orders because you're waiting for price to come back to an area. With a stop order, price is just going to immediately go through a level, right? So once it touches a level, your order is activated. That's not what's going to happen here. Now, the deeper the retracement, the longer it takes for you to get that nice big push up or that impulse up and down. One of the really like the nicest levels, in my opinion, I don't use it often, but it does happen. And when I see it, I get excited, is the 38.20. Anytime the 38.20 is respected, there usually is a very strong impulse. So let's just think about it like this. Normally we think like if we pull something back a lot, it takes off, right? Well, with Fibonacci, it will pull back, but sometimes the further it pulls back, the longer it may take to achieve the result, sometimes. With this right here, if you get a short pullback either to the 23.60 or the 38.20, it usually will just take off from there. So what do you look for to make, like to get into this, right? Like how do you know to get in? Well, you're not just going to say, oh, well, it respected my 38.20 or my 50% and I'm just going to get in. No, there has to be other confluences or confirmations. There has to be market structure. Maybe, we all have different strategies, but you need to be able to identify that you're getting a retest of some type of structure. We're creating a higher low, right? So there needs to be maybe a high over here that you've seen a resistance turned into a support. And ideally, the most important thing is you want to look for price action to reject that area. So if I'm looking for a buy, I'm going to look for like hammers, inverted hammers, anything that's going to give me an indication of bullish momentum, and then I will go ahead and get into the trade. Now, some of us have a strategy where we want to wait maybe 1 to 2 candles, depending on what time frame you're on. That all depends on you. You just have to back test this and see. And we are going to look at some charts and practice this together. So that's what that is here. Now, the ideal numbers for market structure are the 50%, the 100, and the 0. So I'm going to write this down for you guys. So the market structure numbers is going to be your 0%, your 50%, and your 100%. These are your market structure numbers. So like if you are really intimidated by Fibonacci, with a lot of new people are, literally 0, 100, and 50% are market structure. That's it. That's basic market structure. So like a break and retest to market structure, like if you're in my free training, that's a 50% Fibonacci retracement. Okay, if we're in a trend. So that, just so you know, if you ever pull back to the 50% and you see that rejection there with the candle, that usually is going to give you a confluence of a market structure retest, a 50% Fibonacci retracement, and then you want to look at that price action. And if there are other factors that you use to determine to get into a trade or not, you want to add that to your plan, okay? The last thing that I use for my confluence is going to be price action. So for me, if you're in my VIP team, you know I have to have a zone, I have to have market structure, I have to have a respect of a Fibonacci level, and then I need the price action to confirm it. The price action is number 4 for me just because of the strategy that I use. it always hits. Like it always hits and it always plays out. So I don't really worry about it. But that would be it if I was trading live. So the golden number is going to be your 61.8. And sometimes you'll see people round these up to like 62%, or they'll just round it. And that's, again, it's all a matter of preference. But the ones that are commonly touched are the 50%, the 61.8, and the 71. If you're trading something with a lot of volatility, the 61.8 and the 71 usually get hit a lot. So if you trade like gold, NAS, US 30, GJ, these get touched a lot. Euro USD, AUD USD, let's see, odd USD, they usually will respect the 50%. And then you have sometimes NAS, if there's not a lot of momentum to bring it back, it will respect that 38.20 and just take off. So when I do this, my first take profit is always going to be at the 0. And the reason why my first take profit is there is just in case if the market decides to make a double top and come back down. So what I'll do is I'll set an alert to see how price reacts to that area. And if I see that price is struggling to break that area, I may take my profits and see if I can find another opportunity. Or maybe my analysis is not going the way that I want it and I have to just regroup and try again. Another thing to keep in mind is that if the market does break that 0, our second TP is going to be minus 27. And then what we want ideally is for it to land on minus 27 and go to minus 61.8. Now, if you study harmonics, there is one that goes in between this. I don't personally use it, but there is one that goes in between, things like the 4140 or something like that. Now, if it lands on top of the 0, we can most likely expect for it to go back up to minus 61.8. This is for me, my TP number 3. I don't usually trade to TP number 3 unless like the market is just like moving beautifully, but that's what I normally will have as my TP number 3. The reason why that happens is because if you remember, I said 0% is market structure. So that means this was a previous high. If we're going up, this was a previous high. So this was a resistance. And when it breaks, creating that higher high and landing on top, that is essentially a break and retest of market structure. So if you get that confluence, plus it's landing on top of that 0% on your Fibonacci with that candlestick rejection, that is an opportunity to go ahead and take that back up for a continuation. After minus 61.8 is hit, we usually get a deeper pullback and sometimes a reversal in the trend. So just keep that in mind. There are times where the market will fly through that, but I'm just going over the basics. Now let's look at this sell. It's the same exact thing. You're going to draw it from the high to the low, and we're waiting for it to pull back. And it's the same thing. So when you're in a buy, your minus 27 and your 0 need to be on the top. When you're in a sell, your minus 27 needs to be on the bottom. Because what happens is you want to see the market creating a lower low, and it hitting minus 27 is indicating that we are getting a continuation in the trend. What we need as an additional confluence is for that 0% to be respected, We need that 0% to be respected, which is a market structure number, and which we're hoping to get a continuation down at least to that 61.8, which is TP number 3. Okay, guys? Now, if the market, remember, I always use 0% as my first take profit. And the reason being, just like we did for the buy, is that if the market decides to do this, it could create a double bottom, switch up, and change direction. So I always like to put an alert or something for me to just say, okay, I'm going to check to see how price is reacting at 0. Or if I have multiple positions or a higher lot size, I may take partials at 0%, and then I'll take the rest of mine at 27%. Unless there is a lot of momentum and volume, I'll go ahead and take it down to the 61.8. But for me personally, I always do minus 27 because I have learned that the market like quickly reverses or pulls back right from there. So I found it safer for me as a trader to use that as my take profit. So now that I kind of went over how it works in a nutshell, all right, we are going to look at some examples. So, and before we do that, I just want to make it very clear that think about this as like a ruler that measures your pullback or your retest or your retracement, okay? We use all of those terminologies. The deeper it goes into the pullback, the less likely it is for it to go back in the direction that you anticipate. As we get higher, we are approaching market structure. And what happens is this can form a double top and go down, or this can reverse on you and go in the opposite way. So you have to be very careful that when you start to get deeper retracements, this could indicate either a double top or double bottom is forming, or we're about to have a trend reversal. Personally, I only take trades from the 71 to the 50. And if I do see a respect of the 38.20, I have to see price action confirm rejection to that area for me to get into it. Forex wise, I like to trade GBP AUD, and I know that it always hits my higher numbers. So I won't take anything less than that. I'd rather miss the trade than assume that it's going to just stop right there at the 38.20. I have to have like major confluence to do that. So I have EURUSD pulled up, and you guys, you can do this on any time frame. You can do this on the 1 minute, the 5 minute, the 15 minute. And I have my fractals on just so you can kind of see like what it looks like. Okay. Again, I'm on the 15 minute here. And just quickly, if you're in the free course, you can see where we have just some structure right here. Excuse me. Here are fractals, lows, lows, lows. We have a break and a retest right here. Okay. Now, what we're going to do is we're going to identify, we're going to do this high to this low. So this swing high to this swing low. Why am I not doing any of this? Well, because this is just a minor pullback. We are trying to get the swing move. So what I'm doing here is I'm going to, and I do wick to wick, you guys. So high to low. And you stop your Fibonacci where the market starts to pull back. And it usually is going to be some type of market structure. So if you look left, if we draw a line right here, there's market structure. Support, support. What did I say about 0%? It's usually market structure. If we go here and we draw it at the 50, what's here? Well, not beautifully, but there's market structure, okay? What do we see here? We see a retracement of a 38.20, excuse me, a 23.60. Again, it's not one that I normally trade, and I don't trade EU, so I don't know what levels it likes to pull back at. But we can see where it respected that area. Now you have to see what type of confluences you have. If you don't see any immediate structure, my suggestion to you is to draw a line right here, go to a higher time frame, and you will be able to see, oh wow, look, there is structure there. I just wasn't able to see it on the 15-minute time frame. You don't have to keep going left and trying to look for, there's no need to do that. Just go to a higher time frame and you will be able to see. As we can see, it's been respected twice. That is why price stopped there, okay? So that's, when I see this and I see it's respecting the 23.60, if that's not a normal level that I'm trading, then I need to find out why is it stopping there. And I did not know why, but I went up a time frame and I was able to identify there was structure there. Bam. So now I see we have a break and retest of structure. I also have candle rejection as well. And then I have a bearish candle here. So if you wanted to be patient and wait on the 15-minute, your entry in this particular trade would have been right here. You could have put your stop loss slightly below this high, and then you would take it to minus 27. Now, if you see that it pulls back underneath the zero for a trend continuation, you could bring your stop loss into profit. Again, this is not financial advice. You could bring your stop loss into profit and let it ride. And that's exactly what it did, you guys. I had no idea I was going to do this, by the way. But you can see where it broke and retest at 0% for continuation, almost up to our 61.8. So you can see where, like, even though I wanted it to go to 61.8, it didn't. The market was stopping here and creating a support. And all we got to do is see, why is it stopping there? Draw a line, and then we can see there's some structure. So price was unable to break that area. If you're more advanced, you could have been using divergence and other things like that to help you identify what's going on. I think the doji at this area was a really good indication. But once you see the market doing this, it's time to exit your trade, and we're approaching the afternoon. But this right here, besides it retesting the zero, that was also a retest of market structure, you guys. So we didn't get it up to the 38.20. It didn't go to the 50. It respected the 23.60. We had to figure out why. We went to a higher time frame. We drew a level. We were able to see, okay, that's why it stopped there. There's 1 hour market structure. So now let me just confirm the price action. If you like to trade smaller time frames, go down to the 5-minute and just look at that price action and see if it's what you like. Personally, I was okay with the 15-minute price action. I would have waited after this candle and got in here, and I would have been comfortable with that risk to reward. All right. So now let's look at a buy, which I have not even done. But we're going to do this one because it looks a little bit awkward. And I don't like things to be perfect. I want them to be realistic. So over here, we have a support, right, you guys? This is our support right here. I wonder if I could label this. Do I have it? No. All right. So we have our support here, and the market creates a high, right? The market creates a high. We're going to draw a line there. And the reason why is because it hit that area before. So that's why it stopped there. The market just doesn't stop wherever it wants. So now because it's stopped and it's starting to pull back, I am able to draw that fib. Now, some of you may ask, okay, well, can you draw, oops, excuse me. Why can't you draw it from here to here? I could draw it from here to here, but this is just a minor pullback. So even if I drew it from here to here, this would have been a 2360 retracement, and then it would have just went up to market structure, didn't hit our level. I'm going to do the overall move to the 1 hour market structure because that's going to give me more confluence. It respected a 1 hour level. It pulled back. And what did it pull back to? It pulled back to my 70%, my 50%, right? What did I say 50% was? 50% is market structure. Let's look left. Bam, here's our previous high. We broke and we retested it. Now we have a spinning top candle right here to confirm that buy. So we get into this buy on the next candle, our stop loss slightly below our previous candle or market structure, whatever you want to do. And essentially our goal is minus 27. Okay, that's essentially our goal. Now, this one did not go to our goal immediately. And this is what I was talking about when I said that I always use 0 as my take profit number 1 because you never know if it's going to form a double top or a double bottom. And that's exactly what it did. It failed to break our 1 hour structure, gave us a rejection candle here, and started to go down, giving me the opportunity to either exit my trade, take partials, or just be comfortable with what I thought was going to happen. And if I would have held this to minus 27, my stop loss would have almost been hit, which was only 5 pips. I definitely recommend using a bigger stop loss if I have to be honest. But I just did this. And nothing major, you guys. You don't need to go major with EURUSD. So like, you don't, just maybe slightly below the structure, like right here. But I'm going to keep it at what I had it at. Or was it 5.6 is what I had it. So we come back down, right? And we probably may have freaked out, but price is staying, it just quickly slipped, you guys, and went right back up. So if we did not freak out, we could have held this, or if after we exited this position, we saw that it was respecting the 50% again, you could have got back in the trade. Now, you would have not been able to identify an entry based off of this bearish engulfing candle because it's showing no sign of rejection to that level. So you would have had to identify this on a smaller time frame and wait for price to basically respect the level and create new structure right here. Okay, if you wanted to get in here, you could have, but for a new trader, you probably would have been like, that's a bearish engulfing. It's breaking my structure. I don't think I should get into a trade. You wait for it to come back in, get in the trade, put your stop loss below here and ride the rest of it up. Either way, it respected the 50% and it shot up. Now, if the market creates the same low and the same high, you can't draw a fib. That's consolidation. So for example, if I draw it from here to here, that's a 100% retracement. And like we talked about, when that happens, that is an indication that either we're getting a double top or double bottom, or there could be a reversal. So there was a possibility this engulfing candle could have broken this and we would have not been in a bullish trend. Now, throughout this very strong momentum, you would have not been able to apply your Fibonacci until you literally got up here. And again, you got a 2360, but it stopped at this resistance area that I don't have notated, but most likely it's a resistance from a higher time frame. So if you wanted to take advantage of these type of moves, you will have to go to a time frame smaller. And at that point, you can see where you have a little bit more opportunity. So here you go. You have a break, you have a retest, respect of about your 2360 to your 3820. You have some market structure right here, your hammer candle. Market shoots up, closes above the 0, goes to minus 27, and instead of it coming back down and retesting the 0, it ends up going up more because the volume's just there. The volume is just there. Then you can repeat it. Look, low to high right here. Same thing, kind of dance around that 2360 for whatever reason. This likes that 2360. And then you can see it did the same thing, you guys. So let me see if I can do one more sell for you and maybe a higher time frame. And then we will call this a day. All right, so let's look at this right here. Let's look at, we're just gonna look at a sell. So if we look at this daily trend, we've been bearish, right? We're creating lower highs and lower lows. So we're going to look at September 12th. And what I'm going to do is literally draw it from this high to this low. Now, remember, my ideal area is for it to be between the 50 and the 71. This wick is an indication where price attempted to go, but the candle was unable to close at those levels. It closed below. So you can see where price was respecting, number one, this market structure. You see that, you guys? So we have beautiful respect of the market structure. Another rejection candle here. So this candle closed below it. So once that candle closed below, it's time for you to start looking for an entry, okay? So you're going to look for your entry from there, or you can see how it reacts on a 4-hour or a 1-hour time frame. Remember, that big wick is this big candle right here, and you can wait for it to close under. Now, if you're going to be using the daily, I recommend that you identify like the 71, 61.8, identify it on here, like put it on your chart and type in 61.8 fib or 50% fib on daily, so you can see how price reacts to it. Personally, I use my 4-hour for my entries, and it's my favorite time frame for entries. It is one of the most accurate in my opinion. It may take a little bit longer, but those usually give me the nicest setups for my swings. So when I do this, for example, right here, I'm drawing from this high to this low. I have a beautiful retracement right below the 50. I have market structure here as well. Look, market structure, market structure. I have a rejection candle at spinning top. I'm getting it on the next candle. That's it. Beautiful. I can continue to do this, High, low, rejection of the 38.20. See how all these candles are having a hard time rejecting this area? That's letting you know it's respecting it. We're in a downtrend. It's respecting it. We have a bearish flag pattern. It's time for it to go down. Hits minus 27, respects 0, which is market structure, and gives us a continuation past minus 61.8. So if you are watching this, your homework is to go practice how to draw your fibs, see what level it likes to respect. Feel free to use the fractals indicator. Feel free to find one that works for you. If you need help identifying highs and lows, if you don't need help identifying them, then just make sure you draw them from wick to wick, and let's see what you come up with, you guys. I hope this helps, and have a wonderful